Wow, guys, what a day. So we seen here, look at the Costco. Now, guys, this is breakout momentum, guys. This is what I wanted to show you guys. This is why I personally think the market's going to head higher here after that correction here that we had, that dip. So look at this. Remember how breakout momentum, we come down to that 10-day and then we start rising, right? We come down to that 10-day, start rising. Here was the hook pattern we made at Costco, okay? We got the green candle tomorrow would be the entry. We would be buying the 220 straight calls for the November 16th at 8:05. Entry was on 10:9. So if we go back here, here was the entry on 10:9. We had our base, our double base there, and we said the next day the green candle would be our entry. So this was our entry here. It was a beautiful setup for a hook pattern. And what happened? Here was also part of the note there. It said, seems so far we have a base of the hook at 220 a share. Target profit area is 229 to 230 for a quick swing trade on confirmation. And that confirmation was made on the 9th. We entered. We met our price target. And this is what we're doing now, guys. So we got in there and met our price target. And just like I said, guys, this is why I believe we're still going to head higher. Take a look. Breakout momentum. Remember how it works, guys. You guys remember I did a 2-hour video on this, on the details of it. We're coming down to either the 10, 20, or 50-day SMA, and we're bouncing. And depending on what SMA we come down to, that's going to tell us the strength of that breakout momentum. If it's coming down to the 50-day, then that's a sign that it's not going to climb as rapidly, as strong. When it's coming down to that 10-day and then bouncing off, that's a strong momentum. And then you could see every time it came down to that 10-day or the 20-day here, that was time to buy. That was when you wanted to buy and add to your position. So as you can see, it came down to that either 20-day, the blue line here, came down to the blue line here, came down to the blue line here, it came down to that 10-day, and look at here. See when it was coming down to the 20-day SMA here, you see how the climb was shallower. And then once we bounced off the 10-day, see how steeper this climb was here. Look at the difference between the climb here when we bounced off the 10-day and then the climb. You see how much of an incline that is compared to here when we were bouncing off the 20-day and then climbing. So like I said, their entry was on 10.9. And take a look now. This is what I feel is happening. So we got that hook pattern. So you have to understand, guys, there's different types of patterns we trade, okay? And this is the detail that I wanted, and this is why I had to take over the trade room at TSE, okay? Because I want details. I want members to know what we're doing, why we're doing it, and know every single detail. All right, so what we're seeing here, this was a breakout momentum. It turned into a hook pattern. We traded that hook pattern, got to our target. We took some profits, and that was a great trade. Now what we can do is, like I said, when it breaks out above that 10-day, it turns into a breakout momentum. So now tomorrow, if we get a green candle tomorrow on Costco, that's going to be another buying opportunity. And then that's going to be a sign that we're going to head up to that 235 area next. You have to understand, guys, there's different, you have to be ready. You have to be on your feet. You have to be ready to go. You can see here, this is the breakout momentum, classic breakout momentum I've gone over with you guys. And depending on where it comes down to, that's going to tell us the strength of that climb. And like here, you've seen that when it came down to that 10-day, it had a steeper, larger climb. Once it had that larger climb, like I said, you could tell how the stock's going to react depending on where it goes. So you could see it came down to that 20-day SMA, okay, and it started bouncing. And then, like I said, that 20-day SMA, it's a shallower climb. Once it started bouncing off the 10-day, look at that climb there compared to when it was bouncing off the 20-day. And this is how you decide with weekly expos, monthly expos, what strikes you're going to get. You're anticipating what that stock's going to continue to do. Okay? And that's how you do that. So right now, guys, what we're looking at, we traded that hook pattern. We took our profits. We took half of the profits, actually. We have the November 16th expo. So at TSE yesterday, we took half of the profits. We locked those in. And now tomorrow, this stock was all the way down. This stock was down 2% today. That's huge for Costco. And we climbed above. Remember in my videos, I say I want the body of that candle above the 10-day for the breakouts. I don't care where that wick is. That wick's not important. The body above is important to me. Just like down here, you could see the body goes below the 20-day SMA here. Or I'm sorry, the wick goes below the 20-day. So a couple of times, like here, this is where it opened and this is where it closed. So that's fine. As long as we're not seeing a whole body below that SMA, like here, for example, we closed below that 20-day. Noticed how the stock did not go back above that 20-day blue SMA here. This is important, guys. These are the details that I want to teach you guys. So notice the difference between when the stock is bouncing off this blue 20-day SMA compared to when it breaks below it, the full body candles below it, and then it's failing to break above it. That is acting as resistance. The stock is failing to break resistance, and then what happens? It has a large drop. We traded that as a hook pattern. We made those profits, took half of the profits. Now what we're looking for, if we have another green candle tomorrow, that's going to be another entry point into Costco, and then we're going to start seeing a breakout momentum. So we're predicting what's going to happen. We went from breakout momentum to hook, and now we want to see us to continue to bounce off those SMAs like we've seen back here. That's the details that you have to be looking for and what you want to trade. Okay, so that's Costco. Now SNPS. This was the other stock we just got into. Wow, look at that, Soren. I sent you guys the alert. I didn't even make the trade myself yet because I'm in such a teaching mode today. I don't know why. I have a lot of energy today. Maybe because I slept, actually. So this is great, guys. We got in this at 92.18. It's at 92.39 right now. This had every check mark going for it. There's no doubt this is going to be a great trade and make some profit. So that's a nice setup there. Like I said, guys, let's take a look at the Diamond ETF now because it's important to look and see what the Dow's doing compared to, look at that. Look at where we went. We're back into that channel now. Remember this morning, it looked like we were doom and gloom. I mean, I literally got message from people saying, wow. I literally got message from people saying, wow, there we go, guys. We're now in the green. We went from a 550-point drop to in the green now. Incredible, guys. So like I said, guys, this is what's important. Let's see. That's why I say, guys, wait until you see where we're at closing. It's 3:26 p.m. now on October 23rd, 2018. So look and see where the stock's closing compared to where it's at in the beginning of the day. Okay, so here we're staying above the 200-day SMA. That's a great sign for me. But this is the problem, guys. We're not out of the woods yet because we still have tech earnings. Notice this climb on tech. This is something I went over with you guys before. How could I do this here? Let me do this quick. All right, I'm getting calls. I'm getting text. I'm getting messages. I don't know what's going on with you guys, but could you shut that phone off, please, quick? Or answer it quick? Tell them I'm busy. Tell them I'm busy. Take a message. All right, guys, so this is what's important. You see this. See how we're dropping, see how we're climbing from here. We have 2 points that we could so far go over right now. And what we can do is we could chart those. We could go over those. We're holding above that 200-day SMA. That's a great sign there, guys. So that's what we're looking for. As long as we're not closing below that 200-day SMA and then struggling to break above it. Remember what I said, guys. Here we're bouncing off of it. Remember before, guys. This is important. I want you guys to remember this. Remember what it's like to bounce off the SMAs and then to stay below it and fail to break above it. That's important. So you see here, we're bouncing off the SMAs. That's breakout momentum. And then when we drop below and fail to break above, that's breakdown momentum. Okay, so we broke down, we got that drop, and then it turned into a hook pattern. We trade that hook pattern. And now, guys, we're back above the SMAs here. That's why this is a bullish candle. You should be trading Costco. Again, I can't say that. I'm not a financial advisor. I'm not a licensed broker. I'm not anyone but a trader. But this is breakout momentum, guys. I'm sure you guys could see it. I'm not crazy. You could see the breakout momentum bouncing off the SMAs, failed to break. We turned into a hook pattern, and then now we're back above the SMAs. And as long as we don't close below that 10-day, I'm happy with that. If we get a green candle tomorrow, that's going to put us above the 10-day, above the 20-day, possibly even above that 50-day SMA. And then we're going to see, like if we extended these lines out. Actually, yesterday, this is what I wanted to do this video on. What did I do that video on yesterday? 10/22. I went over something with you guys that was really great. Let's see here. Is this it? Nope, that's not it. Is this it? Nope, that's not it. Is this it? Nope, that's not it. Let's see. McDonald's. What a call on McDonald's, huh? That was incredible. There's the chart on McDonald's. I went over with you guys yesterday. I'm telling you guys it's going to have a nice pop. Bank of America. What's Bank of America doing today? We went over Bank of America yesterday. Down 1.31%. It's at the highs of the day, though. It's rebounding with the markets. All right, back to this here. Where is that chart? That was CVX. Amazon. Was it Amazon? No. Trying to think what that chart was yesterday. I went over. You guys remember, I went over a chart where I drew the lines. If you guys remember, yesterday I drew the lines and I said this is what we don't want to see. If you guys remember the name of that, I could look it up. I don't know where I saved it on the computer. But I shared with you guys how I extended the lines and showed you how this was going to cross below 1, the other one was going to climb, and I showed you the pattern. I forget what stock it was. But guys, this is what we're looking for, and this is how we have to trade the markets here. Like I said, the biggest thing is going to be tech this week. Tech is going to be the maker or breaker. Guys, please shut off your volume, your microphones. I could hear people in the background. Please keep that down. All right, guys, so like I said here, you've seen how we came down to that 200-day way back here in April of 2018, again in February of 2008. And if we zoom out a bit here more, we could see, it happened back. I mean, every time it came down to that 200-day SMA, we had a nice break then above it. So it's either going to be a great buying opportunity or a time to start exiting. So we'll see what happens here, guys. Like I said, if you guys watch the videos, you know what we're watching for. We're watching for that 50-day to cross below that 200-day, or for the charts for the candles here to start climbing. Okay, breakout momentum, think of. All right, just like you see down here. We came down to that 200-day. What happened? We started breaking out. This is breakout momentum. We're coming down to that 200-day. We broke out. Came down to that 200-day. We broke out. Like I said, what we have to worry about here is if we see the 50-day cross below the 200-day, that's going to be a sign that the markets are turning. Okay? We're not worried about this little drop here. This is just consolidation phase, guys, on the macro level. You're looking at micro, macro levels, okay? So on the micro level, we're seeing just for the past 20 days we dropped. Just like here, guys, this is important. Look here, the past 20 days we dropped. Here, the past 20 days we dropped, and then we rebounded. Same thing here, past 20 days we rebounded. Now, tech is reporting earnings. That's my only worry. If tech reports great earnings, this is going to be fine. This is going to be great, and this would be a great buying opportunity. But if tech reports bad earnings, if they miss, if they have bad guidance, that could be the catalyst that we see that 50-day cross below that 200-day SMA, and then we start to head south. That's what I don't want to see. But for the short term, now you're going to see if tech has good earnings, this is going to get a bounce, and we're going to start climbing. And that's going to be our catalyst to start buying some calls and doing that breakout momentum type of stuff we always do at TSE for some nice gains. So that's what we're going to look for, guys. It's pretty simple. Like I said, tech, hold off. There's no reason to trade yet until tech. Like down here, if you came down here and you said, hey, there was a make or break decision on this day, would you be buying? No, not yet. And see what else I don't like here is how it looks like we have topped. Like see how back here, it was, I just don't like how this momentum's starting to shift a bit. So we'll have to see, guys. Like I said, tech earnings right now, your defensive stocks, your safe haven stocks I've been going over, like Costco. Look at Costco now. It went from down 2%, it's back in the green. It hit our target. ABX, guys. We did an ABX trade yesterday. That was up over 100% this morning. There's different time frames. When we make a trade, it's because we're expecting volatility, not because we're expecting a move, because no one can expect a move when you have, news events or the type of situation we're in with the market right now. You're waiting for that time for that make or break, okay? And you're watching these patterns and trading off the patterns. All right, you can't say, oh, look at this, look what's happening here. I totally lost my train of thought, what I was trying to say. Anyone remember what I was saying at right before that? There was something important I wanted to go over. Do you remember? What was I talking about? I don't know. Guys, in the chat, what was I just saying? Okay. Okay, yeah, that's right, guys. So volatility, like you're going to see volatile times. But like I said, no, that still wasn't it. There was something important I had to go over with you guys, and I totally forgot that point I was going over. But anyway, guys, like I was saying, if you're bouncing off these SMAs, we had that hook pattern. Now we're in breakout momentum. If we get that climb tomorrow, a green candle tomorrow, then that's a sign that we're probably heading back into that breakout momentum phase because we have holiday cyclical trend coming up, guys. This is why I don't like market noise, guys. Market noise is just that. It's shit. Don't listen to market noise. We're in a volatile market right now. The market is volatile. We're having large swings. You notice here, when the candles are smaller. When the candles are smaller, not much is happening. When these candles get bigger, that's when the implied volatility increases. That's when we see those larger moves. So, you see the wick to wick of this candle right here. That's a large move. It's not a typical move. That's only because implied volatility is higher. So you have to expect news, and that's why you have to stay away from market noise. And that's why a lot of times I don't even go in the trade room. I'm a disciplined trader enough to know that, hey, what's going on in the market? What's coming up? I know there's a holiday cyclical trend coming up. I know there's a lot of things going on in the market that can affect the market, but what are the positives? And what are we looking for? I know that what I'm looking for me to start buying some puts is a cross of the 50-day below that 200-day, just like we had on the diamond back in 2008. Let's go back. I want to show you guys. And this is why I don't want to see this red line here start to cross and go lower and then see this, continue to climb where this red is going to meet that pink, and then we see that crossover. That's going to be a bad sign for the market that we're heading lower. But we're not seeing that yet. That's why I'm saying, guys, wait until you have those confirmations. There's so many traders that, oh, let me get into this. Let me get into that. I got to trade today. I got to make 10 trades. That's not how you trade the market. That you're better off going to the casino. Look at here. This is the Diamond ETF. Look what it has done. Look where we're at, and look what we can expect. The 200-day, guys, why do you think it comes down here? Members today got it right. They were saying, hey, the algos are playing. That 200-day, in the last video, 3 videos ago, I went over algos and how they work. Algos are simple. How they work is they plug in a system. Once it gets down to the 200-day SMA, if it's a market capitalization above $500 million and it has these parameters, then it's going to buy. That's how it's working. That's how it's going on. That's why you can't worry about intraday noise. Don't worry what the hell goes on today. Worry about what we're focused on. Focus and detail. That's all that matters. That's really all that matters. Like I said, this 50-day, we don't want to see that cross below this pink 200-day because let's see what happens when it does. Let's go back. Let's go back. Okay, again, we're looking for this red 50-day to cross below that 200-day. Let's see when that happened. Right here, that happened. We see it here. It crossed below here and it kept going lower. Okay, but that's only back in 2016. Let's get to 2008. See again here. See, guys, how that 200-day, it always, usually bounces off of that. Usually bounces off of that. I mean, sometimes you'll see a little hiccup where it goes a little bit below, but you see it came down, came down, came down, came down, came down, and it bounces off of it. Now let's see what a reversal looks like. A true reversal. Here we go. Here you go, guys. Look at this. So this is when, let me get rid of these RSIs, MACD. No point of that. Here you go, guys. Look at this. When this 50-day crossed below this pink 200-day, what happened? This was the financial collapse, okay? And you have to understand, our economy is strong. We're coming to a head, and you have to also understand this. This is extremely important. There's elections coming up, guys. What happens if the Democrats take over? What happens if Trump doesn't win? What if he doesn't win his next term? If Democrat comes in office, what's going to happen? All that progress that Trump made is going to be gone, and then it's a start over point. What do you think the markets are going to do then? They're not going to take that well. So that's why elections are going to be important as well. But guys, this could be the start of a catalyst. This is why we're watching for this 50-day to cross below this 200-day, because when that happened, we could have bought puts right there when the market was at 132.48 back in December 27th of 2007. That right there was our point. Hey, we need to buy some puts. All right, because then what happened? Now you see breakdown momentum, guys. Just like we have breakout momentum where we're bouncing off these SMAs and climbing. What happened next then? Once that 50-day crossed below that 200-day, we turned into breakdown momentum. Look at this. It came down, crossed below. We bought the puts there, and then it went up, and it failed to break above that 200-day, and it came down. It went up to that 50-day next. It failed, and it broke lower. Came up to that 50-day, failed, broke lower. And then once we got that 50 to climb above that 200-day, that was a time that, hey, the market trend is over. That downward shift is over. Now, that took almost 2 years to happen. July 26, 2007, up to June or July 26th of 2009. So that's almost 2 years that took, guys. That's almost 2 years. So that's why I want to tell you, focus what's important. That 50-day cross below that 200-day, that's going to be our time that if that happens, we're buying some puts because the market's topped, and then with the election coming up, that's not going to look good. Okay, I don't care if it, if we got in and it bounced a little bit higher, that doesn't matter. The shift is from breakout momentum, just like you see here. Breakout momentum, guys. We're bouncing off these SMAs and climbing, bouncing off the SMAs and climbing. Then what happens once that 50-day crosses below that 200-day? You see it never crossed below here on the momentum breakout. The breakout momentum, this 50-day never crosses below that 200-day. That's a breakout momentum. Breakdown momentum is when we cross below that 200-day. 50-day crosses below that 200-day, and then we fail, and we go into breakdown momentum. We're getting up to the 200-day and then dropping. Getting up to the 50-day SMA here and then dropping. And then, like I said, when that trend is over, when the 50-day crosses above that 200-day. That's what we have to watch for now with the Diamond ETF. Now let's take a look at the Qs. And the Qs, guys, same thing. If we get a cross of the red 50-day below that pink 200-day, that's going to be a sign that the markets are heading lower. But for right now, guys, we have to go with the market flow. And for right now, we're bouncing above still. Okay, so we have to wait. That's why this is an important time in the market. You have to look and say what's going on. Are we going to have this holiday cyclical trend here and keep bouncing higher? Or are things topping and are we going to start to see a reversal? That's what we have to focus on. Let's take a look at Amazon here. Amazon. See, we had the low, and now we're at the high of the day. We're near the high of the day. But here's what the problem is, guys. This is exactly what I wanted to show as well. I don't want to see us getting up to that 10-day and then failing and then failing and failing. You know, earnings is coming up for Amazon on Thursday. What's today? Tuesday, Wednesday. So on October 25th, today's Tuesday, October 23rd, 2018. So on Thursday, the 25th, Amazon has earnings after the bell. If that has a good earnings, a good chance we're going to break above these SMAs and be back into breakout momentum. If it has bad earnings, bad guidance, or it doesn't have good guidance, then we could see a breakdown, and then that's when I'm worried that we're going to see that 50-day cross below that 200-day, and then that's going to be time that we make some money on some puts. Because once we make some money on some puts, you know what they say, guys, up like a feather, down like a rock. So if that does cross below, then we're getting some longer-term puts, and I'm going to take advantage of that. But for right now, guys, tech earnings, that's going to be the first catalyst. If tech earnings are bad, then there's no doubt that I'm going to be buying some puts, because then that's going to give me a little bit more confirmation that we're going to see that 50-day cross below that 200-day. So I don't want to see, like you see here, how it's bouncing above. Here now it's failing to break above. So that's what we have to watch for. But like I said, we can't make a conclusion on this yet until after we see earnings. That's what the market's waiting for, guys. The market's waiting for Q3 earning results from big tech, which is going to happen this week. So once we see that, that's going to be our catalyst to make those trades. Like I said, bad tech earnings, we're probably going to see that 50-day cross below that 200-day, and that would be a sign to start buying some puts longer term, for me anyway. And if we do see a breakout with good earnings, then we could see this turn into breakout momentum again. Just like Costco, guys. I want you guys to get in this type of frame of mind here. Like I said, you could have traded Costco. This is all the way back from April 2018. You see how it came down to that blue 20-day SMA, bounced, came down to that blue 20-day, bounced, blue 20-day, bounce, bounce, bounce. And then what happened once it went below? It failed to break above. It dropped, and that turned into a hook pattern that we trade. So, guys, you see, the stocks, they turn into patterns all the time. Here's breakout momentum. Then it turned into, this was the period that I say when it's between SMAs, don't trade. That's no trade. It dropped. There was an event here. It was probably earnings. It dropped, turned into a hook pattern. We traded that with our target. We have specific targets. Like I said, I made a 2-hour video, how to trade hook patterns, how to trade breakout momentums. And now we recovered from that hook pattern. We took our profits. Now what we're looking for is if we get a bounce here from this 10-day SMA and start breaking out again, just like here, breakout momentum. So we went from breakout momentum down to a hook, and this could possibly be a breakout momentum now, and start to climb and bounce above these SMAs. And you guys seen yesterday, though, too, there was unusual option activity on Costco. They were buying the 235 strike calls for the November 23rd Expo. Was it the November 23rd or November 30th Expo? They were getting one of those two Expos, either the November 23rd or November 30th. They bought the 235 strike calls. That tells you something, guys. Holiday season's coming up. Black Friday's coming up. There's certain stocks that are going to do well during the holiday cyclical trend. So you have to understand there's different types, there's different periods of the market where you want to focus on different things. Okay? That's important. It's not like, hey, you just plug in a system and just, do that. You have to take account of the market variables. There's market variables that computers don't understand. And that's when we come into play. And that's why TSC is as big as it is here, guys. Because we're a great group of team of traders here. We know what to look for. We know how to trade. And this is what we focus in on, guys. So that's what we have to look for, guys. Like I said, tech earnings. And look at ABX. I want to show you guys this quick here. So ABX, we got into this yesterday, right? We got in at TSC Alert. Let me pull it up here because I want you guys to see. Oh, and those of you that wanted to see how our trade alerts look. Here's how they look. I just made a trade. Here's the Santarelli Exchange. You won't see this until you become a member. Okay? Once you become a member at TSC, then you'll have access to this all-important trade feed. Okay? And this is what happens. So we just made a trade 50 minutes ago on SNPS. And I just did a webinar for members on this as well. Okay? They won a contract. An analyst upgraded it. They upgraded the target price, and then they upgraded the stock from a neutral to a buy. Stock is climbing, RSI climbing, MACD crossover, cross above the SMAs. Here's SNPS. Look, oh my God, we're up crazy on that already. So we got that at what? Wow. Wow, it's at 405 right now. What did we pay? 380? $3.80. It's at 405, so we're currently up 4.05. Divide that by 3.8. So we're up already 7% on that in just a matter of minutes, less than an hour. All right, guys, so back to this. So when I send out this alert, it gives you the entry price, what the stock was at the purchase price. It gives you a brief chart overview here. And then here is the order entry. Buy to open, call, 90 strike, expiration date, November 17, 2008. And then below here, I give a brief explanation of why I'm entering to this trade. I give technically what's going on with it, the resistance, the stop, what we expect with it. And then below, I give a detailed chart, target, stop, and then some analysis. And then I'm showing you what's in the news here. So here you see Synopsys wins a contract for advanced emulation technology. No terms disclosed. That was on October 17th. Okay, and then J.P. Morgan upgrades Synopsys to neutral, announces $98 price target, and then Benzinga's top upgrades the 23rd. It got upgraded from neutral to buy. So now you could see they upgraded it first to neutral, then they upgraded it from neutral to buy. It just won that contract. And then if we go over here and take a look at, let me see this here. Hold on one second. Let me bring this up for you guys. So if we type in SNPS. And then take a look at this, guys. Here is the analyst price targets for SNPS. SNPS, as you can see right here, Synopsys, and then what do we see? We see an average price target of 106.5. That's 12.01% upside from where it's at now. A high target of 115, which is 24.19% from the upside from where we're at right now. Even the low end target, 98. That's that analyst that just upgraded it. They just upgraded from 94 to 98, and that's still 5.83% above from where we're at right now. So as you guys can see, we have all those catalysts, all those things going on, and let's take a look at, and here's the actual option chain itself for that Synopsys 90 strike calls right here. You can see SNPS November 16th 90 call up $2.40 today, up 150%. That's incredible, guys. That's going to continue to climb. I think we're going to see that much higher. Let's take a look now at the trade again. So that was Synopsys, guys. So great trade, great analysis. You could read what's going on here, what we wrote, why we entered the trade we entered. I even have another video specifically the price we're looking at for these contracts. We paid $3.80 for them. I told them what I'm going to be looking at to take profits at. And then look at this yesterday or 4 days ago. This wasn't 4 days ago, was it? I thought it was just yesterday we made it. But we made ABX. ABX 1320 the stock was at. We bought this for 56 cents, okay? And today this was up over 100%. Bought it for 56, it was up over $1. And this is what I mean. Look at ABX now. Let's take a look at this stock, this chart. There's a reason why we buy the stocks we buy. Every one of them have different price targets, different. I don't like how this is. This is not pairing up here. I don't know why that's not working. Hmm. Let me get up a different one here. There's something wrong with E-Trade, guys. It's not letting me bring up the stock charts. Let me try this again. All right, here we go. But it's not the chart that I wanted. It's not working here, guys. This is why E-Trade Pro is horrible. This is why I don't trade off of this platform anymore. It's not reliable. E-Trade has gone downhill. You type in something, it doesn't even come up. All right, well, let's look at something else here. So ABX was up over 100%, guys. That was great. That's how the trade alerts look on the site. And then the video section. The educational part does not work because I didn't build that out. I said, you know what, I'm going to have the live trade room instead. And when you click on the live trade room, you can enter that. And like I said, that's why I don't have the educational page, because I rather do these videos. They're much more educational than just reading something and not know what's going on. So that's what we're doing, guys. And here's the trade room. You could trade charts down here. If you see down here, you could type in Bank of America. It has the SMAs that I use. It has the MACD and RSIs that I use. Here we go. Bank of America is down at the lower end of the RSI here. That's a good entry point. What are we looking for now? We're looking for a green candle to stimulate a buy there. Give us that catalyst. Give us that trigger for a buy signal. And all day long, guys, we're just in here and talking, communicating, and going over so many things. So this is the end of this live webinar here, and I'll be back in the trade room in a second. Alrighty, guys, take care. Bye-bye.